Hey, everybody. Welcome to Swan Signal Live. I am your host, Sam Callahan. I'm the lead analyst at Swan Bitcoin. So happy to be here today. But before we get started, I wanted to talk about Pacific Bitcoin 2024. Now is your time to lock in the cheapest prices for those tickets. These are the early bird prices, and they come with a full refund by February. So if you're thinking about going to Pacific Bitcoin 2024, now's your time to lock in those cheap tickets. It was a great time out in sunny California. Next year, it's going to be even better. Bigger guests, bigger festival. We might even have a couple special guests that you wouldn't really expect to happen at a Bitcoin conference. So if you're thinking about going, now's your time. Go to pacificbitcoin.com, click that QR code. This show, we're going to be talking about all things markets with somebody that follows everything very, very closely. I'm really excited to bring on this guest today. It is Mr. Alex Thorn, the head of firm-wide research at Galaxy Digital. Thank you so much for coming on Swan Signal Live, Alex.
Yeah, Sam, thanks for having me. Happy to be here.
Yeah, so I've been a big fan of everything that you guys do over at Galaxy for a long time. I've said that you guys put out some of the best research, and obviously you're kind of the head of that research. And so I'm really excited to talk to you today. I wanted to get a little bit about your background. I know kind of podcasts always start this way, but you've kind of been in Bitcoin for a while, right? And I would love to just hear a little bit about that.
Yeah, I joined Galaxy in January 21 as head of firm-wide research. I was at Fidelity Investments for my whole career before that, so 12 full years or 11 and a half years or so. I started working in the legal group. I was we call litigation supports, effectively forensic investigation for litigation, employment, regulatory inquiries. I later was a senior compliance advisor at Fidelity Institutional, so managing SEC, FINRA, state examinations of our institutional broker-dealer business at Fidelity. Then I was director of blockchain research at Fidelity Center for Applied Technology, and later I ran Avon Ventures, which is the early stage, co-ran it, I should say. It's still operating. My partner, Sachin Patodia, runs Avon still. The early stage crypto-focused VC firm affiliated with the owners of Fidelity. And yeah, I had gotten interested, I would say nominally in about 2012 in Bitcoin, did some purchasing and selling in 2013. It wasn't until Fidelity got interested in it in about 2015 that I got really interested in it, realized, oh man, like, wait a sec, they're talking about that thing I know about. That's when I sort of really went down the rabbit hole and became a true believer. And then I sort of did some work to get myself hired to work on research there, and sort of the rest is history.
So I got a couple questions for you. One is that at Fidelity, what do you think made them kind of more open to this idea of Bitcoin before a lot of these other traditional firms? I mean, even today, we're still seeing a lot of firms kind of sitting on this and not giving it the appreciation it deserves. But Fidelity seemed to be really open from the get-go. I mean, there's a lot of really brilliant voices in Bitcoin that have come out of Fidelity, including yourself. What do you think the culture was there that allowed them to kind of be open to that?
Yeah. Well, I appreciate that. That's too nice. But I would say it's actually pretty clear. Fidelity is a privately held company, right? It's not publicly traded. It's owned famously, I don't have the cap table. I don't know the cap table, but it's famously owned by the Johnson family. So Abby Johnson is the CEO and chairman of the company. Her dad was before her, and her grandfather founded the company. So they have a lot of leeway and money to put forth towards technology innovation. Fidelity's famous for this over the years. So they, did things like, I think they're the first mutual fund company to allow check writing off of a mutual fund. I think people in the 70s or 80s or whenever that happened, they were concerned that if they let their customers write checks, literally gave them checkbooks that connected to their mutual fund, then everyone would withdraw their money. Well, of course they didn't. And in fact, more people put money there. They did 1-800 Fidelity, investing by phone. I think Fidelity.com was one of the first brokerage. They were one of the first brokerages to have a website. Ned Johnson, the current chairman, Abby's father, was well known in computers. I mean, and they were early technology innovators, and they sort of, both by being successful, but also by virtue of not having public shareholders, they're able to put a lot of money towards technology innovation. So it has that at its culture. Abby's father, Ned, created this organization, this unit inside Fidelity called the Fidelity Center for Applied Technology, FCAT, as it's called at Fidelity, literally a technology incubator, right? So when I was there, they were doing blockchain, AI, machine learning, encryption, virtual reality, literally like people whose job, like with no true expectation that something firm as a product would emanate from those projects, right? So true innovation spend. It has that history, a history of innovation. And then I think when it comes to Bitcoin in particular, Abby Johnson herself became very interested in it. And I think, unlike most large companies where it's been like a junior or middle management person pitching Bitcoin up, for years, trying to get the company to do something, the mandate really came from the top down at Fidelity. And of course, that helps clear a lot of pathways. And a lot of folks, like in my case, right? I mean, I was already at Fidelity and they had reached out and said, who knows about Bitcoin? A very, very small group of initial people were tasked with looking into it. Abby wants to look into Bitcoin. Let's look into it. And they reached out around the company and they found people like me who were really interested in it or already knew a lot about it. And I think over time, and this cycle continues there, a lot of the people that are at Fidelity now sort of came through the same type of, right? Fidelity has, I think, something like 50,000 employees today. So there's plenty of a large pot of people that are interested in things, whether it's Bitcoin or anything else, to draw from. And that culture of innovation, I think, has, it's bared fruit. I mean, I think among the big traditional financial firms, they're by far the deepest in Bitcoin.
Yeah. But lately you have been seeing kind of a shift in sentiment, I would say, between a lot of these firms. At least it seems that way from some of the messaging that you're hearing from, the BlackRocks of the world. Like you've kind of have a ton of different examples of this over the last, say, 6 to 12 months. What do you make of that? I mean, do you think it's for real? Do you think they're finally starting to accept this? And then why now? Like, why do you think these institutions are finally starting to get it?
I think it's a big deal. I mean, BlackRock's not just getting interested in Bitcoin and the space. Like Chair Larry Fink said, it was part of a flight to quality trade,
Yeah.
which I think is a very, very strong signal and endorsement of Bitcoin's role in an investing landscape. Frankly, more bold than I even remotely expected. I think than he even I don't think, thanks, Larry, like that's incredible. I think we agree with that, right? I mean, I think Bitcoin believers agree with that. I think the market infrastructure has matured significantly. I mean, you've got qualified custody, you've got institutional lending and trading and prime brokerage and accounting and a whole bunch of things like that, right? That did not exist certainly in 2015 when Fidelity first started looking into it, but not in 2017, not even to the same extent in 21. You've got so that all makes it more possible, I think, just generally for folks to get interested. Institutional players, like in the case of BlackRock, right? We're talking about asset managers. I think there's also demand. I think people genuinely, I think over the last year, right? I mean, FTX collapsed about a year ago. I really think a lot of people in the traditional world who may have, whether they were interested in Bitcoin or not beforehand, were genuinely shocked that Bitcoin is still around after the year that the markets had last year with all those blowups. So and it is still around. I mean, Bitcoin was up 100% off a base of like 16.5 at the start of the year. I think now, or maybe call it 110%. It's objectively one of the best performing assets in the world. That speaks volumes to people. And then you look at also the regulatory environment in the US. Like there are some tricky complexities about regulation. Most of them, I would say, apply to other parts of the cryptocurrency industry much more than they do to Bitcoin. But there are some things that touch Bitcoin, whether it's FinCEN or AML KYC related stuff. But broadly abroad, the picture is very different in EU, in the UK, in the Middle East, in Hong Kong, and some parts of South America, and in some parts of Africa. It's much more permissive and also clear, right? I mean, the EU is not more permissive, but they passed a comprehensive plan for how to deal with digital assets like Bitcoin. So businesses know how they can operate, right? There's still a lot of uncertainty in the US, but I would say A lot of that uncertainty doesn't really apply to Bitcoin. And I think over the years, it's become very clear to institutional and global macro investors that Bitcoin has a role to play here. And many of the macro investors trade Bitcoin in some way, right? Even Stan Druckenmiller, like last week with Paul Tudor Jones, said, I don't own any Bitcoin, but I should,
Yeah, probably should.
right?
I probably should.
I think there's just a growing recognition that it's here to stay. It's global. It's like a commodity. It's in many ways uncorrelated. Even if I don't, it's been uncorrelated from a performance standpoint over time, but it's fundamentally uncorrelated, right? It's an independent, decentralized global architecture, et cetera. So I think there's a lot of reasons. Part of it is the maturing like market infrastructure is a big part of it, but also just it's time. I mean, the thing has been around for a long time. It didn't go away when everyone said it would. And this is now what, like, a lot of people first heard about Bitcoin in maybe like 2017, and they thought
Mhm.
it was going to go away. It didn't.
Nope.
Then they thought, okay, surely it must go away this time. It didn't. I mean, at some point, like, you can't say the sky is falling over and over again without it actually collapsing. Otherwise, you have to believe it's not falling, right? And I think we're really sort of at that point.
Yeah. I want to double click a little bit on the market structures maturing. I'd agree, especially when you compare like the current market structure to say 2017, 2018, it's matured. But at the same time, last year we saw a lot of the big players get wiped out. At least the ones that were big players in 2021. We saw a lot of bankruptcies. We saw Ponzi schemes blow up. Do you think that's part of the maturation process where those big players like the FTXs of the world, like the Genesises of the world, there's just going to be a new players that kind of fill that hole that was left from those organizations? And do you see that as part of the maturation process here?
I think it is part of the maturation process. I don't. I wish it didn't have to have been.
Yeah,
Obviously, I don't think it was healthy that those things occurred. But now that most of those are resolving or have resolved at this point, I think that is positive that they have.
definitely.
I think the players that you have now, whether they're increasingly traditional or the way I like to say it is like they're. I think Joe Bankman said on the stand in the case, the Sam's case, that he was the adult in the room. There was evidence from
Yeah.
emails where he
Yeah,
said,
there
"Oh,
was
guys,
that.
I'm the adult in the room." Yeah, I mean, there really wasn't
Yeah.
an adult in the room, and there wasn't at several of the lending firms either in the sort of figurative sense. And I think the firms that are still around, like Galaxy, to be honest, are manage risk actually, right? Some
Yeah.
of the firms we talked about, I mean, if you read the Genesis lawsuit the NYIG has brought, there's some pretty devastating stuff in there that just like you wonder how it could have possibly been true.
Yep.
Um, a lot of those firms, I mean, they got their comeuppance, right? They're either bankrupt, they went out of business, they got acquired, et cetera. So I think that it's objectively cleaned up a lot. I mean, I will say there's more liquidity that is needed in this market. I mean, that like significant liquidity has been drained from the market compared to 21, given that so many players have exited, right? So I expect now you'll see more traditional players enter. If you look just at the applicant issuers for the ETF in 21 compared to now, they're significantly more mature, right? I mean,
Mhm.
you had some like Fidelity and Invesco Galaxy that are either large ETF issuers or in our case are partnered with one in 21, but you didn't have BlackRock, right, which is the largest. You didn't have basic sort of major institution. People had sort of written off Fidelity here because they're like, oh yeah, look, Fidelity's had that as like a hobby horse for all this time, right? It's like,
Mhm.
okay, I mean, they are the third largest asset manager in the world. I think that, I guess it's been, quote unquote, priced in their involvement over time. Yeah, anyway, to your question, Sam, directly, like the blowups from last year, like absolutely are part of the maturation of this market infrastructure. I think you're going to increasingly see traditional players from traditional finance be involved in various parts of this. I think with the proper regulatory changes or clarity, you could see the traditional large custodial banks become custodians, right? Right now, they're effectively prohibited from custodying Bitcoin because of the Staff Accounting Bulletin 121 the SEC put out that requires that banks and public companies hold client custodied assets on their balance sheet, and banks in particular are subject to capital ratio rules that make it basically economically impossible for you to do so. So I think there's more maturation to come. But again, the fact that we're alive, that the market exists, that Bitcoiners are here stacking sats despite all that's happened, it's just that shock. I mean, they're truly. I mean, think about how many times the Peter Schiffs and Peter Zahans and have been wrong, right? Like, I mean, how many times something is clearly going on with this Bitcoin thing, right? And I think a lot more people are realizing that. So you'll see maturity continue to increase over time.
Yeah, each time Bitcoin kind of rallies back up from the grave, it gets harder for these critics to not question their assumptions, right? I mean, the smart ones will start to question it, and the ones with maybe an ego will dig their heels in and just watch this thing rip again. But it's hard for people
It's
to.
like that GIF of the is it the Undertaker,
Yeah,
the wrestling guy
The
when he's
Undertaker, exactly.
coming back up from the dead. I mean, yeah, I agree.
Each time it happens, and it's kind of like, wow, whoa, this thing's back again. Like, we have to look at this thing now, especially as you say, like when you have, these more credible institutions starting to be constructive on it. It's really hard to argue against it. And you guys, when you show the data like you guys show, and we focus on this at Swan too with the Nakamoto portfolio, but just trying to get across this idea that even if you include a small percentage allocation to Bitcoin in a more traditional diversified portfolio, it can do wonders for you, like long term in terms of performance, right? You guys put out that report recently. What were some of the
Yeah.
takeaways from that? Because I think that's just important for people to understand that, this thing, given its uncorrelated nature, could really benefit just a portfolio. And what did some of your data show that you guys found?
Yeah, there are so many. You guys have a great the calculator that you guys have that is Alpha Zeta
Yeah,
responsible for that. I've
yeah.
actually really enjoyed. Yeah, you have the variety of different ways to look at it. Then it's great, by the way. I really like the ideas. There are many in that portfolio method. It's really interesting. We did something pretty simple. I think there's two main the historical performance at different levels of Bitcoin. That's the sort of obvious question, right? Like, had I done looking back 1%, 2%, 5%, what would my portfolio have and what would its Sharpe ratio have been, right? So that's the risk adjusted return. So that's when you adjust for the volatility of an asset. What would it have done to the entire portfolio's risk adjusted returns? That's question one. And I think and not too difficult a question to answer. Again, with historical data. So looking backwards. The second question, which is I think also very interesting, in some cases trickier, is okay, so now you want to get off zero. From where do you draw? Where within a portfolio do you draw that allocation? It is, and there are sort of quantitative, we can tell you from which bucket of a standard portfolio it would have performed best historically, but that also comparative questions into how you think about what Bitcoin is, right? I mean, is it a store of value like gold or a metal? Maybe it comes from an alternative investments bucket like real estate and metals, or is it a tech growth venture bet on the? I've sometimes thought of Bitcoin personally because of how big I think its potential is, in terms of market cap growth, that it's kind of like a venture bet on early stage gold, if there is such a thing. Although of course there's not, right? So we're when you get
Yeah, I
into
love
the
that.
narrative, yeah, when you get into the narrative game of where to pull an allocation from, no, we have a view on it, which I'm happy to share. But those are the two main questions, and I think when you do that historical analysis on the risk adjusted returns, we did it looking at a bunch of different allocations from a bunch of different buckets of a portfolio. So from the equity allocation or the fixed income allocation or an equal allocation or a commodity allocation, right? And the reality, and so for the report you're referencing, Sam, which you can read on our website at galaxy.com/research, it's called the impact and opportunity of Bitcoin in a portfolio. Many people have done versions of this. It obviously, all of these analyses, the time period that you look at matters, right? We tried to be very fair, which is pretty standard for these. We did 2018 to present, so we covered two full bear markets and one bull market, right? So you had 18, 19, 20 as a bear, and then 21 and some of 22 as a bull, and then the rest to present. Again, trying to be fair, because to be clear, if you look further back, Bitcoin performance only looks better, right? So we're not
Mhm.
suggesting that
Cherry
people,
picking. Yeah.
Yeah, right. We're trying to be fair with this and frankly conservative. I mean, I would say like at pretty much all levels from all allocations, it was including 1%, 2%, 3 from each of those buckets, it was extremely additive to the portfolio from a risk adjusted returns basis. But I think what was the most interesting is the biggest delta between two levels was between 0 and 1, right? Which kind of reaffirms this, long said mantra of just get off 0, right? Like
Yeah.
the biggest enhancement to the portfolio was just allocating 1 from 0.
Yeah.
And that's what we found. So I mean, and then we use that data elsewhere, right? I mean, this is the type of thing you rerun periodically, right? It's not, again, it's not rocket science to do this analysis, but it's
Yeah.
the methodology matters. We try to be conservative.
Yeah, and like, yeah, an individual's allocation is unique to them, like the position size is unique to them. But from a
Right.
lot of this research, similar research, you could say that the wrong allocation is 0. I mean, that's a
That's
consistent
exactly
across
right.
all of them, right?
Yeah, I
And,
mean, if you put in 100%, then you're 100% exposed to Bitcoin volatility, right? I mean, so the
right.
the whole key with volatile assets is position size. There's nothing wrong with volatility can be great. You just wanna make sure that you control the volatility with your position size, and the volatility can help, obviously, the overall risk performance of the portfolio. But yeah, exactly. I mean, obviously,
Yeah.
if you did, 100% from 2014 to present, you'd be a genius. A genius
Right.
investor,
Well,
right?
I think of it the same way. I like how you phrase it as a like gold like, venture bet almost. Like it has a unique characteristics of gold, that value proposition, but it's also like a young tech stock or something like that. So
Yeah,
I
it's
think it's
got a lot of growth
extremely unique.
potential.
A lot
Yeah,
of
and
growth potential, yeah.
I've called it gold with wings. I mean, you can actually use it. Can't really
Gold
do
wings,
anything with
I like
gold.
that.
Like, I mean, it's like Red Bull gives you wings, like Bitcoin gives your gold wings. Like, I mean, because like if I have gold coins, right? If I have American Eagles, which are the ones I typically like, those I'm not going to pay with the whole coin. I'm not going to I'm not going to melt it down when I go to the store, right? I mean, it's pretty inconvenient to use as payments, let alone if you're storing large amounts of wealth. Like it's physically heavy, like it weighs many kilograms, right? So like
Maybe.
we know this already. I'm just saying it has similar, of course, your audience knows scarcity properties, etc. Self-sovereignty properties that's holding your own gold or gold coins has, but you can actually do something with it, right? It's weightless anywhere with the internet. We all know this. So to me, that also adds to its growth potential, just the usability of it. The idea that it's the same reason you might want gold, right? For independence from the global monetary system or something that's perhaps uncorrelated with other types of assets. But this one you can actually use. Like to me, that's just a net obvious positive.
Yeah. I just read about like the Bank of Poland, the Central Bank of Poland finally repatriated its gold from World War II from London in 2019,
Wow.
and it took them like it was like a 2-week operation with trucks and planes. They
Yeah.
had to be secretive about it. They had to move all this gold, and I was like,
Right.
this is another example, right?
There's Yeah, there's that story. I don't know. I've actually seen that maybe this isn't entirely true. I'm not sure, but the story that after the U.S. suspended the convertibility of the dollar to gold, that France sent a warship to retrieve their gold.
Mhm.
I don't think it was as far as I understand the story, it's not because they were threatening war. It's because they're going to transport a lot of money. Like it's physically, they need a big giant ship with guns because like it's because it's a bearer asset. So I mean,
Yeah.
again, like not everyone has a warship. And
Yeah, it's like that meme with all the
so I
gold, and then there's
yeah,
just like a hardware wallet, and it's like whatever,
right.
$100 million, classic.
Yeah, and I think it's reasonable to think of it as a risk asset. I think just
Same.
going back to the sort of original point, like the market has for a long time mostly traded it as a risk asset. I think the earlier periods in Bitcoin's price history where it was mostly uncorrelated to say the S&P, it was much smaller. Like I mean, it's uncorrelated because like nobody who traded S&P was trading Bitcoin. It got more correlated during parts of the last bull run when people who trade both were trading it, right? I think
Mhm.
so. I do think it will become less correlated over time. I think if you look, like I said, at the fundamental thing, it looks a lot different than other stuff. That alone should be reason for it to trade differently than the stuff, right? I mean, I think you have to assume at some point markets are rational and they actually figure out what they're trading. Not everything's a meme trade, right? Like
Mhm.
not everyone's trading momentum. Eventually people are buying something they understand. And so over time, I think it becomes less correlated with other types of risk assets. But I mean, it's really quite reasonable, I believe, to trade it either way as a risk off or a risk on asset. I think we're still probably in the on balance in the risk on period in terms of correlation, but
Yeah.
over time, I think that goes down.
Yeah, I think that's an important point of like why people are buying Bitcoin. I do think the reasons for buying Bitcoin are maybe a little different than the rest of the cryptocurrency space in terms of like this digital gold narrative of savings. I think it's pretty unique in that facet. But I wanted to talk about the options markets and how it's been affecting prices because we've seen Bitcoin do really well this year. I mean, it's like you said, it's up over 100% year to date. It's the top performing, asset class, let's say, of the year. And part of it was when it broke 30, it just exploded in a way. It exploded all the way up to 35 really quickly, and it caught a lot of people by surprise. But you folks over at Galaxy, laid it out that this is probably related to some of these dynamics happening in the option markets, a so-called gamma squeeze. And for somebody who's not familiar, who's listening, I was wondering if you could break down, what is a gamma squeeze and why do you see this like really explosive price action when these gamma squeezes happen?
Yeah, so I would say a couple things before specifically the gamma squeeze at the end of October that happened, and it was one, and it was foreseeable. I mean, we had talked about it on our podcast, Galaxy Brains, 2 or 3 weeks before.
Mm-hmm.
But look, options volumes have become a bigger and bigger part of the overall cryptocurrency market in general. There's some reasons for that. One major one is that it's much harder to gain leverage in this market than it was during the prior bull market. Part of that's because a lot of the lenders went out of business that were providing that leverage, but you can use options to gain leverage. And so many do. It's also in general, I mean, I'm not an options trader, but but there are many more nuanced ways to express your view on the price of an asset using options than there are with pretty much any other trading strategy, right? Or trading instrument. And the traders of Bitcoin are becoming more sophisticated. So they want more sophisticated ways to express their view on the market. I think what happened in September and October, I mean, effectively a gamma squeeze is essentially when there's significant demand for short dated calls, right? So a call is the option is a bullish option that suggests that you want upside exposure, right? So if you're buying the right you're buying the right to sell the Bitcoin at the higher price, right, in the
Mm-hmm.
future. So and when there's a lot of demand for those short dated upside calls, someone's got to sell those, right? Someone's taking a view. A dealer typically is offering those into the market, right? So they're
Right.
selling
They're on the other
calls
side
to
of that
people that are buying
contract.
them.
Yep.
Exactly. And there is someone on the other side of every options trade, right? So and of course where the two parties meet is where the option itself trades, the price of buying or selling the option. What I think what happened is a lot of the market was really sort of caught off guard by how bullish a lot of the dealers, in particular, the dealer market was caught off guard by how bullish the market sentiment for the Bitcoin ETFs would become,
Mm.
how quickly, right? And um, so they sold a lot of options. They sold a lot of calls,
Yeah.
right? Because especially like if you think about like Asia not having its sort of ear to the ground of the sentiment in the US, right? The ETF story isn't a US story, right? It's not, there are already ETPs and across Europe, there's ETFs in Canada and Brazil, like they're right. When we say the ETF, we mean the world's largest $44 trillion stock market, the US, right? So um, I think there were, whether retail or other institutional investors effectively got long and bullish sooner than the dealers sort of realized. And then that, if you remember that Monday at the end of October, I think would have been like the 26th, maybe.
Mm-hmm.
I can try to find, I guess, a calendar on this computer. No, okay. I think it was about the
I think that's right.
23rd or the 20.
I think it's the 20.
Yeah. So I think, Sunday maybe was literally I'm like Googling calendar and like
23rd.
one
I
is
think it
not
might have been the
immediately
23rd.
coming up. Yeah, so the 23rd. So the thing is in particular so the dealers to hedge their exposure, right, can do a number of things. They can buy the calls back, like they can buy spot to help stay delta neutral. The thing is when you get really close to an expiry, and there were 2 that week, the October expiries were in that week, like where these calls mature, right,
Mhm.
and either pay or don't pay. There's not a lot of supply. right? I mean, people by that moment, in the case of that last day, they've decided whether they're going to hold or sell this option already, right? There were not a lot of people there to sell the options, the calls back to the dealers. And really at that point, I mean, the main way to try to hedge yourself is to then buy the underlying spot instrument, in this case, Bitcoin. So, I mean, we watch the dealer. We have some proprietary ways of looking at the public options market data, where we try to ascribe, what is a dealer and what is not, like for the trades that we can see. And we watch that because that can have an outsized impact. Now, it doesn't always have an impact, right? Like the gamma squeeze is particularly something that can happen right up, bumping up against an expiry.
Got it.
So, I mean, I don't think that's the cause of the move that we saw on October 23rd, but it enhanced it. It amplifies it. And that's what you saw. I mean, you saw us basically bleed up all day from like 29 to like 31 and then 32. And then when we hit like 32.5, we like basically teleported to 35 in like literally 15 seconds. Right.
Yeah.
And that's what I think caused that. That's what we said we thought could happen. I mean, I didn't like go onto like, exchanges and like see if like a known dealer on-chain address sent, like received Bitcoin at that exact moment.
Well,
that's our assessment of what happened. But options markets are more important in Bitcoin today than ever before.
Yeah. So when the price moved up like 1%, you said these dealers would approximately have to buy like 20 million, Bitcoins worth to stay neutral. It's basically to stay like appropriately hedged in the rest of their book, essentially. That's right.
And it's on short time frames, right? So some people are like, oh my God, 1 million, that's nothing. And that's the voice of people. They're like, that's nothing, Alex, what are you thinking? And I'm like, well, the thing is it's all at once. It's right away, right? It's like it could be immediate, and especially when you're bumping right up against that expiry, right? I mean, basically the market for those options is very, very tight at that moment because they're about to expire. And yeah, so that is what gamma is. It's effectively the amount that you need to hedge, the amount of delta you need to buy for every 1% move, right? And that's just I'm not an expert in all the quote unquote the Greeks, right? But
no, it makes sense.
But gamma is one of these things that options traders have to look at, and that is effectively what it is. I would say it's the cost of staying delta neutral, which means sort of net flat, right? Because if you're a dealer, you're not necessarily. You may, but theoretically, you're a service provider. You're not trying to take a directional view all the time. You may want to be
you don't want
neutral.
Yeah.
So, yeah.
You don't want to be
the cost
of the underlying spot price. You want to hedge that, and
that's how you hedge, right? That's right. That's right.
Yeah, and it makes sense to me because like the options, the open interest on the options they're near like all-time highs, right? Like levels not seen since 2021. But at the same time, you see the trading volumes of spot really, really low. I mean, I just saw some data from, I think, CC data that said that about $26 million in the spot market will move the price 1%. But you're telling me with each 1% move upwards, these dealers basically have to buy 20 million or so. So like, that's just the dealers. And so you have this dynamic,
I mean, they can hedge other ways.
Yeah.
They can hedge other ways, right? Yes. I mean, I think that's why the gamma squeeze doesn't happen like every day, right? Like there's a peculiar set of
up into the expirations
conditions.
Yeah.
Right. Yeah. Particularly, well, and especially that, owners of calls were about to be in the money, right? Like it's going to be very expensive to buy them back if they'll even sell them to you on that day at that time.
Right.
But yes, that's exactly right. I mean, the amount of open interest on options and volumes and options is huge, and spot volumes are low. Like they're still low, right? And this is when I was talking about liquidity earlier. I mean, I looked at data for the end of September, looking at on exchange Bitcoin traded volume in BTC terms, right? So, which is I like because it helps control for price, right? Like the changes in price. It was the lowest monthly volume since December 2016.
2016,
right?
Holy crap!
That's what I saw. Yeah,
that's
I think
even farther than that. That's crazy. I knew it was like lower.
This is
before
this is me looking at the block.
Wow.
Yeah, this is me looking at the block. But I mean, like, it's no, dude. That's before yet. It's so early. It's
insane.
Saying, like, there really is not nearly as much on chain, and it shouldn't surprise because we're all seeing these charts about Bitcoin on exchanges, and you had, it wasn't just people that blew up in 22. Like, you had market makers exit. Like, there are some still, sure, but there are fewer, right? There is genuinely less liquidity on exchange.
You did see some big
So
market
yes,
makers leave, right? I think Jane Street and Jump, like I think they kind of backed out, right? Like some of these bigger
yeah, and
decision-making firms.
yeah, I don't recall like specifically, but yes, I mean, like, and I think there's others that may not have even said that they are, but have really like wound down, or
Yeah.
like lessened their
And then
involvement. So
the bear market
I
itself
mean,
too, the decline in prices, drop sentiment, so that contributed to the drop in
exactly.
trading volumes too. Um,
So yeah, it's an outsized portion of the market. There was an interesting event driven thing that caused the market to become sort of like lopsided, right? With effectively dealers all on for the most part, on a net basis, all on one side of the trade, and then the market moved against them. I mean, it's a pretty straightforward story in that sense. That can always happen, but again, because the this also mostly happens when price is moving quickly in general. Like, not, of course, the gamma squeeze can amplify the intensity of an upward move, but we were up a lot that day. We were up almost
yeah,
3%, right?
that was
So
a
like,
big pump day.
that's a pretty big move in terms of volatility trading. So
Yeah,
if you march slowly, everybody has time to get their ducks in a row and hedge appropriately. But when you start to move quickly, that's when things can get exciting. I mean,
yeah. So
that's what we saw. It's not going to happen over and over, but and I think, you know, yeah,
yeah, so
I guess that's where
I
I'll end
looked
it.
at like, kind of like some of your charts too, and there's um, the way the dealers are positioned right now. You look at like 37,000. But what you're saying is that there would have to be certain circumstances around that to see the same thing again, whether that's near an expiration date, whether there's a catalyst that causes the price to move really quickly. It doesn't necessarily mean these gamma squeezes are going to happen every time just because of where these dealers are
No,
positioned.
no, no.
Yeah. So,
Yeah, and I mean, there are other ways to hedge
and there are other
too,
ways to
right?
hedge.
I mean,
Yep.
yeah, it's just you're just so close to expiry. Like, that might be the only good way to hedge at that point. So,
Got it. No, totally understand. Thanks for clearing that up. I think it just kind of pours fuel on the fire potentially when things move. So it's something to keep an eye on, and the fact that these options are kind of growing in volume while the trading volumes of spot are still suppressed. It's probably something to keep a closer eye on right now. So it makes a lot of sense. Um,
mhm.
in terms of the futures market too, you're actually seeing big volumes there as well. I think it crossed like 100,000 in Bitcoin terms for the first time recently. Um, how do you kind of view that demand? Do you what kind of like takeaways do you see with that? Because I hear kind of narratives around it, but I wanted to get your thoughts on it.
Yeah, I think one of the most interesting things is the rise of the Chicago Mercantile Exchange, right? The CME.
Hmm.
I don't have all of my data in front of me where I am at this computer now, but I believe has bigger open interest than Binance, which was the number one.
Yeah, it
It had
just crossed. It
flipping
just passed
Binance.
Binance. Yeah,
Yeah, so I don't know if that's still true. Like, literally today was like, yesterday or the day before.
yeah,
That's huge, right? I mean, that also shows a pretty heavy involvement from sort of traditional investors, right? I mean, I don't think there's a lot of people that would use would prefer Binance over CME if they have both access to both. There may be reasons
mhm,
why, right? But people that trade CME futures are traditional investors, traditional hedge funds in the US, right? I think so. It shows increased interest, I would say, just broadly in Bitcoin as an asset, that um, among those cohorts, when you see that rising, I think just generally futures are very useful, obviously. I think options are perhaps more useful if you can do them. There aren't many places. I don't know. There may not even be anywhere inside the US in a regulated basis to actually trade Bitcoin options. I think one of the only, if not the only, was Ledger X, which famously Sam Bankman-Fried bought, and it became part of
what didn't he
the
buy?
FTX
Yeah,
estate. Yeah, well, I guess I don't know if I think "he" is a relative term. He
yeah.
bought, we'll say it was bought with money from
With
FTX.
yeah, all the users bought it unbeknownst to
Yeah,
them.
exactly. Yeah, I think that's something I really hope. Now, I think there are other places to trade options in the US, but not necessarily for retail. And so I think that's something I'd hope to see from a maturity standpoint, that options venues and
Mm-hmm.
products will become more available to Americans. So, but futures still very important, but still I think a phenomenal and interesting financial product. I think in a lot of ways it's better than expiring futures. So separately, it'd be really interesting to see perps in regulated perps in the US
Yeah.
on things like equities. Like, I don't, I actually put that in one of the buckets of financial innovation that traditional markets should adopt. I think it'd be really, really interesting. I think it's a great product. Nowhere really to trade perps in the US at the moment, right?
Yeah.
So
No.
maybe I'm aware of, as their offshore thing, and of course Binance and others are offshore. So um, I would say CME, because it is available in the US, not perps, but dated futures. That's part of the reason there's not a lot of other places to trade it, and CME traders are interested in Bitcoin. So I think it's a big part of the story of the institutionalization, personally.
Yeah, and that it's almost like a proxy, like you said, of institutional just interest. I think you could say with these futures volume, because it's a highly regulated trading venue, typically used by them, and you're just seeing it exceed levels of the bull market in 2021, and here we are, maybe in a new bull market right now. But the institutional interest, I mean, you can't bring that up without bringing up the spot Bitcoin ETF. And one of the consequences that I see from that is it'll probably suck funds and flows from those products that have roll costs and are a little bit less efficient into things like the spot Bitcoin ETF. And how would you? I know you guys put out this report where you just tried to estimate like what would be the flows into the spot Bitcoin ETF. You said that there's other ones out there like uh, the Purpose one out of the Toronto Stock Exchange. There's ETPs out in Europe. Um, but that's really not the same as like a US spot Bitcoin ETF. So, how did you guys at Galaxies try to estimate what would be the impact and what would be the amount of flows that would flow into this thing if one is approved?
Yeah, the main thing we focused on is what cohort of investor types would be most net new, have net new access if a Bitcoin spot ETF were approved, right? Because you and I, Sam, we can buy Bitcoin on Swan or somewhere else, like, and have been, right? I mean,
Yeah.
retail Americans have had access to buy spot Bitcoin. There's not really a question of that. Um, Similarly, even the most sophisticated investors, endowments, allocators, they have the sophistication to enter into private placements and enter private Bitcoin funds and do all the paperwork and stuff associated with that. And some have, right? It's what we viewed as the cohort that largely can't do spot on exchange and doesn't have the time or scale to do private placements for a bunch of client management sector. We're talking like, in simple terms, oh, I have a financial advisor. Bam, that's probably in this sector we're talking about. Oh, I've
Mhm.
got a guy tall. He makes recommendations. And he's a fiduciary duty to me. He manages my accounts, quote unquote, right? Like, so those primarily exist in our view. The U.S. wealth management industry is primarily broken down into three groups: broker dealers, banks, and what we call RIAs, registered investment advisors. But we mean independent RIAs. So, broker dealers are pretty straightforward. These are the large investment, mostly the wealth management arms affiliated with investment banks that you know of.
Mhm.
The big ones. I don't want to just name names, but that's 20. I think what I have 27 trillion in AUM estimated today, just those ones. Then you have the banks themselves. It's like your local bank, regional banks that have a wealth management platform. That's 11 trillion. This is the total AUM I'm talking about, not Bitcoin or anything, just total.
Yeah.
And then this independent segment we talked about, we had at 9.3 trillion. These are like Alex Thorn, I'm going to say John Smith, CFA, like written on the door in your downtown street, right? Not affiliated with like a big firm that like runs ads, for example. And I don't have a back, John Smith doesn't have a back office. He doesn't have a check writing. He doesn't have a trade execution. So typically what they do is they use a platform like Fidelity or Pershing or Schwab. Like many of the big broker dealers and brokerages will white label their entire platform for this use. And that allows John Smith, the advisor, to open multiple accounts for all of his clients, manage them with software, have access to the underlying trading. Like the platform will mail the account statements every month or quarter, right? Like all the business of it. So those three comprise the U.S. wealth management market. And the independent RIAs that use like a Fidelity or Schwab platform, they probably do have access to the cash settled futures Bitcoin ETFs, but many don't, or are less likely to have access to the trust products that trade. The banks and broker dealers, as far as we know, which perform much more diligence and approval processes around what can be traded on their platforms by the advisors on behalf of the advisors' clients, they do a lot more on that. And as far as I know, none of them allow either the trust products or the cash settled futures ETFs. Without like specific exceptions, right? So, and now some of the broker dealers may actually offer private Bitcoin funds, right? So that it's not that they have zero, but even those are, I would say, pretty small. So again, like our analysis is primarily based on who would benefit the most from access to a traditional ETF wrapper for Bitcoin in terms of access, right? And so that's just where we start. That's sort of the basic. Once we have that big number, we looked at each cohort, and in some cases we looked at the individual entities that comprise it, like, looking at AUM from big to small of like the banks, the broker dealers, and made value judgments about who would be more likely to add it to the platform if it was approved versus like take longer to add it. And we just come up with a sort of a total addressable AUM ramp up schedule over a 1 year, 2 year, 3 year. For each of those segments, which comes out to a total addressable AUM. And then we just, back of the napkin say 10% will choose to do 1% allocation. So 1 in 10 choose to allocate 1, right? I think both, why the one, we talked about that one already. It's pretty straightforward from the portfolio allocation report. 10% is just straight up made up. I think that sounds like a pretty conservative, reasonable number, that 1 in 10 effectively addressable dollars in our TAM choose to allocate something. I think it could be 1 in 5. It could be
I think it's
more or less.
conservative, to be honest, which is why I appreciate you guys, analysis.
We're trying to be
more conservative, and even in the conservative, you're like, wow, this could 14 billion in the first year. It's
I think that can be a pretty credible way of arguing any kind of rhetoric, right? Like, and I did venture investing, and a big part of these types of analyses is really just triangulating on something that's reasonable. Like we don't know if the we obviously don't. In fact, I can almost tell you with certainty it will not be exactly the numbers that we say, right? Like what we're trying to do is set a reasonable baseline. And even if you don't like our numbers, like we're putting out there the methodology very simply so that you can make up, plug your own numbers in. You think, oh my God, 10's way too conservative. I like their other stuff on the ramp up on the TAM, but it should be 20%, choose to do 1%, right? Like effectively, we've given you the calculator for this methodology. And, there are others. I was just there's this JPM report that they put some, researchers at JPM. It's not like JPM corporate, right? They're like analysts at JPM. And they said that, they said 2 things. One, that interest in the ETF would be like much more lackluster than people think. And I think they said, a spot Bitcoin, that 2 main arguments: a spot Bitcoin ETF approval would help crypto markets to attract fresh new capital as the newly approved ETF see inflows. And then also basically they thought that the halving is priced in, which is just funny if you've been around. Remember all those arguments in 2020?
Yeah, of course. They come out every 4 years.
Yeah, but primary to that first one, that the inflows would be less than people think, which is effectively what they're saying. They cite Canada and Europe, but Canada and Europe are significantly smaller markets than the US. And I just looked at the 2 biggest ETFs in Bitcoin ETFs in Canada, which I think have about 1.3 billion in AUM today. And then I looked at the stock market, which the US is 22 times bigger, and just did that simple math, right? Well, that would be 28.6 billion if it was as performant as Canada.
Yep.
That's That's a lot more than
Pretty
we're
big.
predicting in this
Yeah,
report, right? Like, to me, that looks more.
almost double.
Yeah, Eric Balchunas is going even further. He's saying, look at all of them. They have 2.4 total under management, and actually look at the size of the ETF market, right? Whereas I looked at the whole stock market. I don't know. He says the US ETF market is 32 times the size of Canada. So that would actually have it be 76 billion, right?
Yeah.
So I'm just like, to me, I think, and I actually think those are relatively reasonable ways to think about it. Why would, so, and now we don't know, but this raises the question, if you want to disagree with that simple proportionality argument, then you have to either argue that the US will see more or less proportionate interest in Bitcoin. I don't think we need to get into that argument, like, literally, but like, that's the question then, right? Like, why would it not be proportionate? And I think, frankly, many people think it will be more.
Yeah, and I
Not
mean,
less.
I remember when the Purpose ETF, the Canadian one came out. I mean, it broke records for the first week in terms of the volumes, and then I think it was a timing thing as well. Like the bear market happened, and yeah, interest faded when
That's
Bitcoin
true.
dropped 70%. Like it's pretty normal to me. And if we're about to enter a bull market and kind of ETF helps kind of drive that, it's going to be very, very different in terms of the interest in it. If we have number going up, I mean, it's a powerful incentive for people to look at this thing when you see the price moving upwards instead of downwards. And
Yeah, and a lot of fiduciaries too, keep in mind, like, let's say they did have access to the trust or the cash settled futures, right? The
Mhm.
cash settled futures are pretty good. They track closely if you're doing short-term trading. Most advisors are not doing that,
No.
right? They're allocating an allocation, maybe they're rebalancing quarterly or annually, right? They're not like actively trading. So the things that they hold, they don't want to have, decay over
It is
long periods
low
of time,
cost.
which the cash settled futures absolutely do. Um, the trusts are high fee, right? So,
2%, yeah.
y and of course, many have traded, out away from their net asset value.
Yeah.
So, those reasons alone, even if structurally you had access to put your clients in them, you had reasons to not even look further than those. You didn't have to even consider Bitcoin as an allocation for your
Mhm.
end clients, because there were structural reasons why they weren't suitable, right? They were too costly, they decay. That's it. Like, question done. I don't have to bother to learn the next thing about, well, okay, basically Bitcoin wasn't an option to allocate. I think if you have efficient, classic, commodity spot style ETFs, which is what are being proposed here, a lot of those reasons to just dismiss it out of hand go away. And then you really may need to be thinking, wait a second, the performance says this. Like, I think this is partly why, so many people think that Bitcoin could end up becoming a part of so many people's portfolios, right? Because the performance speaks for itself. It does have these commodity like fundamentally stable features, right? Like, effectively 100% uptime, global, decentralized, no issuer, right? No liability to any particular issuer, like, et cetera. Like, that it makes a lot of sense. And so, again, not everyone is going to decide to do it, but I do think giant swaths of the wealth management industry will now be forced to consider it.
Yeah, I think, obviously a lot of people have been talking about this ETF stuff, but the more I think about it, the more bullish I get, to be honest about you. Like this, the amount of how this ETF can kind of be plugged into other mutual funds and other ETFs. And it's just like kind of this flywheel of demand that can happen and the accessibility that it'll provide. Obviously, I think holding taking self custody of Bitcoin has advantages over an ETF. Like you don't have to trust somebody else to hold your keys, and we don't have to go through all that. I think people know that, you don't have counterparty risk, but at the same time, in terms of driving demand for the underlying, I mean, this thing could just be a rocket ship for the price. I mean, it really could. The more I think about it, the more it's just like, wow, this could really, really kind of lead us into this next phase of Bitcoin adoption. I wanted to bring up regulatory catalysts because you do a lot of work on that, and maybe what are some that could be positive for Bitcoin that you could see, like providing some of that regulatory clarity we want? Like, how would you like to see that unfold? I know you guys are working on the Proof Act. I want to hear a little bit about that. And then maybe some worrisome regulatory developments that should be on Bitcoin's radars to potentially we can, make our voices loud to kind of combat some of these more negative developments that you see.
Yeah, I absolutely think so. I'll start with the Proof Act, Sam, which is the Proving Reserves of Others Funds Act, and It's a proof of reserves mandate, right? It
Mhm.
mandates that custodians of other people's funds in digital assets, so it absolutely applies to Bitcoin custodians or exchanges, that they don't commingle their own proprietary or principal positions with client funds, like so they don't commingle funds the way, of course, we know some did. But it also mandates that bill, as written, mandates a quarterly cryptographic attestation of assets under possession, and then also a corresponding audit to see what number is supposed to be under possession by the digital asset service, right? The custodian or exchange, effectively. Look, this doesn't, like, everybody's, oh my gosh, what about the other types of liabilities? Like, yes, this is
Right.
not a comprehensive gap audit that is required monthly by private companies. Not what it is. This is saying, you know, website of the digital asset custodians, this much, like, here's how much they have to report that number. It doesn't mandate that they have to have 100%. It mandates that they publicly perform this, right, and produce that information to the market.
Hmm.
I think that's a reasonable step for the Proof Act. Like, do I want them to run a deficit? Not necessarily. And some exchanges offer margin. That's reasonable, or they offer lending. Like, to me, and I think what I like about the bill is that this is purely just about transparency, and it makes use of the
Yeah.
inherent cryptographic nature of Bitcoin, which traditional assets do not have, right? To give us more clarity and transparency around those assets. I think that'd be positive in general. I don't know. What have you thought about proof of reserves? I know there's some controversy here. I feel like half the people thought this was either too strict.
I'm supportive of it. I don't really see the downside at all. Like, I think it improves the transparency and
Right.
helps prevent some of these shenanigans that we've seen. And yes, it's not perfect. And like you said, if you combine it with some kind of audit to, double check the liability side of things, it at least paints some kind of picture.
Right.
Can companies like work around it if they wanted to? Like, maybe like an audit's not like bulletproof by any means, but like, to me, there's not much reasons to not do it. Like, why wouldn't you want companies to be
I
more
agree.
transparent with their operations? And it could prevent some of these risks from building up and protect investors who are using these, exchanges. And so, yeah, I'm overall, I'm pretty supportive of it. I've always kind of been. I think it's unique to Bitcoin and these open source, digital assets that you can do these things. And why not show just another example of why Bitcoin is superior to other assets because you can do things like this. That's my overall thoughts on it. So I applaud the Proof Act. I think it's new and it's a positive development on the regulatory front, and it will provide more clarity and maybe some more will make investors feel like safer to use these entities after some of these blowups. Maybe they're afraid to use them, and maybe if they have some kind of reassurances with these proof of reserves, maybe it'll help them kind of get over the hump in terms of
Yeah,
getting into Bitcoin. So,
that's kind of how I felt too when I read it, is that, like, who could really oppose this transparency? Maybe you want to advocate for more, like that's fine, right?
mhm.
This is politics. Like, everyone's got something they want. I just think this is a reasonable starting point that really moves the needle in ways, like, directly in ways that impact what happened in the industry last year, right? Like,
Yeah.
whereas, look, some of the comprehensive things could be really good. They also are giant packages. They're not going to be easy to get through. Like, they affect the whole swaths of the regulatory landscape. And this is something narrow that could have an impact. Look, I mean, I think in terms of other positive stuff, to be clear, the ETF is also very positive from a regulatory standpoint. It along with the, who are applying for it, being so mature and trustworthy in their sort of postures and history, right? Like, this is sort of, if they happen, it'll be somewhat of a stamp of approval. Now, obviously, certainly it's not on a suitability standpoint. Like, the regulator wouldn't be saying, "Oh, we think Bitcoin." It's not what they're saying, but they are saying that it's mature enough to be carried in an ETF wrapper, and that would be positive. Again, I totally agree with your point. I get asked this all the time. Well, do we really want to, like, isn't this against the ethos of Bitcoin? Satoshi wasn't out here asking for ETF wrappers so they could be in traditional markets. No, to me, it's essential that, like, the right to transact, the freedom to self custody to run nodes is sacrosanct. And if anything inhibits that, then we have a serious problem, right?
Yeah.
But again, I think that if Bitcoin is going to be, extremely successful, And in my view, it ends up becoming even stable money, right? And it's going to take a long time, I think, for stability to actually emerge. Everyone on earth, I tell people, not everyone will have to own Bitcoin for it to become more stable. Everyone has to fully mind about it, right? People have had, 5,000 years to decide what they think about gold, right? Which is why it's much less volatile. Like, no one's like, oh my God, have you heard about gold? No, I've never heard about that before, right? I think we're still very early in the education and phase for Bitcoin, and that's why you see these waves of demand bumping up against its inelastic supply that are different, because people hear about it, learn about it for the first time. But I do think that if it is going to be money, then it's going to have to exist everywhere money exists. And some people don't like this, but it's going to be in bank accounts, on checkbooks, in central bank, reserves. It's going to be in money market funds. It's like that, right? So I think it's essential that Bitcoin survives despite all that, or in along with all that, right? So to me, it's much more about educating the parties that are involved in the institutionalization and making sure that they are truly not making sure, educating them and bringing them along with the vision for what makes Bitcoin truly valuable. I don't think anyone thinks Bitcoin is actually valuable if every Bitcoin is controlled by an intermediary.
Right.
We could just go back to using a database. So for a couple more, I just wanted to make that point because I get asked this question all the time, that people such a big advocate for the, isn't that I don't, but even if it could be seen as, I believe it. So instead, I think we need to react, promote Bitcoin's core values, create the memes that describe core values, so that the fundamental properties they describe are part of the protocol, right? I think that's a thing to do. It's why I'm telling the story, bringing more people into not fewer. Okay, regulatory risks, stuff that Bitcoiners should be thinking about.
Yeah, let's do a little bit of regulatory risk. Yep.
Yeah, so if you remember at the end of the Trump administration, there was that midnight rulemaking, they call it, at FinCEN, which was going to add reporting requirements for know your customer stuff. It wasn't going to ban self, it's going to require like intermediaries to paperwork every time somebody withdrew like $3,000 of Bitcoin, right? And that was going to require you, the user, should you withdraw more than whatever from whatever the threshold was, to provide on your deposit addresses, basically. So it was a reporting regime, but you could start to see the beginnings of, reporting, and then the thresholds get low unless you're approved, and then you can't withdraw, right? Like, and you start to hear right. I mean, like, you could see the slippery slope, like it. And that risk now, but that's because the President Biden basically tabled all pending rulemaking across the entire government when they took introduced at FinCEN, but now we have a new FinCEN thing really focused on mixers. But of course, some of the way Bitcoin actually functions, let alone if you're talking about techniques like coin joins or something else, like a broad reading of the proposed FinCEN rule would even prohibit the use of fresh addresses every time, like theoretically, which is actually how it works. That's how every wallet functions, right? Anything like that is problematic. Anything that comes against, inhibits, or makes impossible or pragmatically too difficult for people to self-custody or send and receive Bitcoin in a self-custody is bad, right? And we've seen an uptick in talk of this since the Hamas's attacks on Israel on October 7th, right? And of course, the subsequent reporting that Hamas has received some amount of funding over time using digital assets. I don't think it was really Bitcoin, from what I saw from some of the open source investigations that by the way, I think that Swan helped contribute to. So thank you for that. I saw others were that Nick Carter had sort of led. I guess it was mostly Tether.
The bounty. It was a lot of Tether.
I don't have any insight to that. I don't think a lot of it was Bitcoin. But regardless, like, that has increased the profile and urgency of this discussion among many policymakers. I don't think anyone, certainly not Galaxy, certainly not Swan or Alex or Sam, want terrorists to have funding. I don't care where it is, right? I mean, we're not, but the issue is more complicated than that, because there's, it's we're talking about liberty and self-sovereignty and a really big idea. And so, I think it's something to watch. I think many good actors in the space are working to help policymakers come up with ways to thwart bad actors, right? I don't think we don't want to help. The question is like, let's figure out what we're talking about. And by the way, let's propose things that actually would help, right? I mean, a lot of things that have been proposed would have no impact on the actual problem, which is primarily an on and off ramps problem. So I would just say broadly, like the sort of some of the policy ideas emanating from fears of Bitcoin's use in illicit finance can be very negative. Some of those policy ideas could be very negative for Bitcoin. And but I would encourage Bitcoiners to not retreat into whataboutism. Oh, the dollar is used so much. It is, sure, but like it's rhetorically a very weak argument. And also to not sort of shut down on the issue. Like, I think people have to, what is the path forward then, right? If we don't give policymakers options that can help achieve the policies the country wants, then we won't be in the room for those discussions when they ultimately happen.
Yeah, I actually, that whole development with the Wall Street Journal reporting on that and kind of the data that was put into question from different chain analysis firms, it was kind of reassuring for me because it felt like the community kind of banded together in a way where we like to bicker a lot in the bear market. And then there's kind of moments where we refocus on kind of something important. And that's kind of correcting some of this really important misinformation, because there can be these knee-jerk reactions at the policy level to these studies. And you have to just educate them and kind of come there and kind of understand their perspective and then say like, okay, but here's why this isn't necessarily correct. And here's maybe some solutions here, instead of just saying, well, the dollar is used for this, right? Because there is a bigger issue of freedom to transact and sovereignty, and not having these overreaching policies come down that restricts that and stops this innovative technology, this payments technology from allowing our society to prosper and benefiting from it, right? We don't want to cut ourselves off it. It's just a tool, and it's going to be used by bad actors. It's going to be used by good actors. But how can we maybe help prevent that a little bit? Like, that's a really big question, but going at them and just screaming at them or saying like, oh, what about the dollar? I agree completely. We have to kind of have very thoughtful responses and to kind of advocate intelligently for Bitcoin. I can't agree with that more.
Yeah.
It's tricky. So
the reaction. And no, I get the reaction that Bitcoiners have. It's just not how policy gets done and is made, right? You've got to come to something. So I just encourage people to think about what that is. I mean, I don't mean like it's a concession. I'm not saying like we've give them something that's from the Bitcoin community or anything. It's more of like, let's try about what policies can actually prevent what government wants to prevent, but what the people want, right? There's a lot of people signed that letter in the U.S. Senate and in the House.
Right.
And a lot of people that are supportive of Bitcoin don't want terrorists to Bitcoin, right? So I think most of us, I think we can agree on that. It's more about a posture thing, but I think that that's the most urgent regulatory risk is bad ideas emanating from that problem.
Yeah. Well, it's only going to get more, it's just crazy to see Bitcoin being discussed, by multiple presidential candidates and on the congressional floor. I mean, that wasn't a thing last cycle. And so now we're seeing it just kind of grow in importance, take over the mind share of these politicians, whether they realize it or not. They're talking about Bitcoin, which is just crazy to think about. But we're out of time. I want to be conscious of that. You've shared a lot, and really appreciate again what you guys are doing at Galaxy. We talked a lot about your guys' work. So if you're interested in learning more about, anything that we talked about today in terms of the ETF report they put out, the portfolio report they put out, their mid-mining report, which we didn't even get into, but I suggest everyone go read that. Just go check it out at Galaxy's website /research, I think you said. But then Alex, where can people find you? Yeah, galaxy.com/research.
Hit me up on Twitter. Yeah, I'm on Twitter as @intangible coins. And
What's the
listen to
story behind
Galaxy
that?
Brains, our podcast.
Sorry,
Well,
but
I
what's
was at
intent?
Fidelity. We weren't really supposed to have, we weren't really supposed to have like public facing Twitter accounts. And at some point in like 2017, several of us were like, we just have to get involved. Like we can't not have them. But I wasn't gonna use, and then my name was taken. I don't want to get into that. It's a sad story. Somebody in a foreign country who hasn't tweeted in 10 years or something has my just at Alex Thorn, and I feel like and I can't get it. So it was more about like sort of a semi-anonymous account, but then we just, used the full name. And then listen to Galaxy Brains, my podcast. I rap at the beginning of every podcast. I promise you it's good. I don't know anyone else that's rapping on their podcasts.
I can attest to it. He's a talented rapper, everybody. What secret talent? Not very secret anymore.
Yeah.
But that's definitely
No,
my
I've
cue every week.
started sharing it.
Yeah, you guys,
Thank you, Sam.
you guys
Appreciate it.
do a good show. So go check out Galaxy Brains. And Alex, we're gonna have to have you back on again soon. Really appreciate you sharing your insights, man. And you just have a great rest of your week. Okay.
You too, Sam. Thanks so much for having me.
All right, everyone. I hope you enjoyed that show. I think Alex is a wealth of knowledge, obviously, from his vantage point as the head of firm-wide research at Galaxy. I just think they put out great research. So thanks again for Alex for joining the show. Hope you guys enjoyed it. Like, comment, let me know how I could improve it. Let me know what guests you guys want. I always appreciate you guys tuning in. So thank you so much. Pacific Bitcoin 2024. Now's the time to lock in those tickets. So you can get a full refund in February, early bird prices. Pacific Bitcoin 2024 out in Santa Monica. It's going to be a great time. You can check out kind of what the last year looked like in terms of the festival-like feel. Meet Bitcoiners in real life. Go to this QR code, get the cheapest tickets that you can get any time of the year is right now, and you get a full refund if you're not going to go. So check it out, pacificbitcoin.com. Thanks again for tuning in to Swan Signal Live. Next week, we got a really special guest from the TradFi world that I think you guys are going to be excited about. Hopefully, we can orange pill him a little bit. So tune in next week for a really special guest, and thank you for listening. Have a wonderful rest of your week.